Hello, everybody, and welcome to the Cyclical Investors Club YouTube channel. My name is Corey Kramer. Today, we're going to be analyzing Cummins stock, ticker CMI. This one came in by request over on Patreon, and if you're a Patreon member, you get your request bumped up ahead of everybody else's. So this one came in this morning. I'm going to put it out tonight. And as always, this is not individual investing advice. This is just how I analyze stocks. I have a free tier over on Patreon along with a $5 and $25 tier. The $25 tier has weekly picks, and they've been doing great lately. So check out those links down in the description if you're interested in any of those. The free tier, I post the same videos mostly that I post here on YouTube, but then you don't have to rely on the old YouTube algorithm to find my work. All right. So Cummins, we get another cyclical. But this one is more difficult, I think, than kind of a classic cyclical, which was the one we did. Oh, yeah, Lam Research was my last one that I did. So pretty much the semiconductor ones are all super cyclical. Cummins makes like engines, so they're in construction and machinery, big part of the industrial economy, maybe one of the best businesses in the industrial economy in the U.S., and as I was looking over this, I've owned it in the past and made some money on it in the past. I really like the business. And as I was looking over it, I noticed that if we just use the historical earnings that you see on the fast graph here, like I normally do, that's this dark green shaded area, you can see that my typical standard of cyclicality that I use is a 50% drawdown in earnings or more. So, and their worst one on here was 39%, but I can still consider them cyclical. I think part of that is because I know they're in kind of a cyclical industry. Two, when I first started doing cyclical analysis, Cummins was one of the stocks that I always covered. And so I always kind of had it in the category to begin with before I created kind of these parameters necessarily that I have now. But even though their earnings are not super cyclical, this is still pretty moderate. I would call this moderately cyclical. And then we have these other declines too, right, when we weren't in a recession. So you can see there's kind of evidence there. Part of the reason that I think these earnings weren't as cyclical as some businesses has less to do with like the drawdown of the earnings, as they weren't super peaky like going into the Great Recession, right? We have only 6% growth and then 10% growth in the years leading into like the heart of the Great Recession. And so there wasn't like a big spiky up peak or whatever like you see with some businesses. You see it a little bit more going into COVID here. And so I'm going to treat this one as a cyclical, but give it kind of special, like as a deep cyclical, but I know that it's basically became less cyclical over the years. If we went back in history, you would see more cyclicality. So I'll make some adjustments along the line, but I'm going to kind of stick with my deep cyclical strategy and just kind of lighten up my kind of normal parameters because they're just a higher quality business. Another reason is actually more of a market type reason. If you see their dividend here, I don't know if they're on the dividend champion, king, aristocrat list or whatever, but they've had this steady dividend for a long time. It even has like a 2% yield now, even though it's at very, peaky prices or almost all-time highs. If a lot of dividend investors, I think, have bought this over the years, and they're more like buy and hold type investors. So they're just a little bit less likely to sell, I think. And it's also going to be in ETFs that maybe people are a little less likely to sell super quickly. So that reduces the cyclicality of the stock price. But if we go back, and I'll show you some of the other numbers on it. If we just go back to like the Great Recession, it fell over 65%. There's like a 70%-ish drawdown there. This industrial recession which is what I call it here, which has definitely affected their type of business. They fell about 50%, right? So these are the type of drawdowns you would expect from a cyclical business. That's why I treat it that way. So that's kind of the context of everything. And then the later context, I guess, the newest context is they're basically at an all-time high. So definitely not at any kind of like cyclical low. I think, so I definitely would be buying here, and I'll share my buy prices here in a second. If I owned it, I think it's kind of a toss-up. It's one that you could honestly just buy and hold, I think, over the very long term. But I would try to buy it at one of these cheap prices, even if I was going to do that. It kind of would depend on what else is in my portfolio at the time. If I had hardly no cyclicals, kind of like I have now, maybe I'll just hang on, and a bunch of cash already like I have now, I'd probably just hang on to it if I owned it here. Because even if it does draw down, we don't know when that's going to happen, and we don't know how deep it's going to be. They haven't exactly had like a blow off top in earnings. They earned $15 here, they earned 21 here, so that's like 25%, maybe 30% growth in 5 years. That's nothing like crazy in earnings growth, right? So they've just been a little bit steadier than you might normally expect, even though I'm going to use my kind of cyclical strategy here. Let me find, here we go. So when I use the cyclical strategy, I focus on those historical price fluctuations, declines is really what I focus on. How deep has the stock fallen during past drawdowns? So these are kind of approximate ones here that I put in as a reference. But so 2021, which actually wasn't like a big, like a deep industrial recession or anything. It was more market oriented. It fell 65% off its highs. During that, now that might have started in 1998. I was trying to say 2000, or it might have started later. I don't remember, but it was during that period, right? Great Recession, about 70%. I just saw in the fast graph it said 71, so right around there, pretty deep, right? Deeper than the market fell, right? And then in 2020, even during that little crash, we got over a 45% decline. So, and then I think I don't have it in here because it wasn't kind of a standard drawdown, but that 2015-ish era of the industrial recession, we saw it fell 50%. So we kind of have a range of about 45 to 70% drawdowns, depending on whether there's like a recession or not. If there's not a recession, like a wider recession, we're looking at like a 45 to 50% drawdown. If there is a recession, usually we see a 65 to 70-ish percent drawdown. So that's what I use as my guide here. I didn't think the price that we're at right now is necessarily super expensive or anything. So I think if we have one of those mid-cycle drawdowns or a crash or whatever that we've kind of seen in the past, buying after like a 45% decline makes sense. That would have got you into the 2020 crash, and it would have got you into the 14 to 6 going into 16 crash or decline, industrial decline. And it might have, I don't know about this one. It's hard to tell sometimes on the graph without looking. Yeah. So that might not have been deep enough here. 192. Yeah, wouldn't have quite been deep enough to get in there, but you would have had a buying opportunity here. You would have had a buying opportunity here. Those both would have resulted in at least a double, about a double at least, within a couple years, right? So with this one, you're recovered within like a couple months. And then back here, you would have doubled your money within 2 years, we'll call it. So that's pretty solid. Now back here, it still had a very fast recovery, which is what makes it so attractive. But you could have made a lot more money if you would have bought it down at that 65% off its high level. And the same thing, it's not on the fast graph, but the same thing back in the 2021 decline. So we kind of have these two patterns, two historical kind of things that the market usually does. They're all a little different, but with the highs that the stock is near now, this is kind of where we're. So I have a little note here about my entry points. So the 45% level, which would be a little bit lower than we are now, I think. Let's see here. I want to double. That should be. I just want to see what my high price is. So that looks right, or that might not be right. Let's take a look. Where are we at? So I base this off of the high prices. So we have a 382.86 here. And I think that's what I have. So that should be a 45% decline. But I'm not sure why this says it's 45% lower. CP739. That looks right. Don't think. Oh, the stock price is higher today. It's not in the fast graph. Did it make an all-time high today? This is what I was trying to figure out. I think it did. It did. Okay, so yeah, 384.39. So you get to see me try to. I have a lot of data in my spreadsheets, and I put a lot of it. Well, I do it all myself, but sometimes I make mistakes. So I thought I made a mistake, but I didn't really, because it just made a new high today, 384.39. So I want to go back here and put 384.39. So this, I entered this manually, obviously. So it should be exactly 45% off the high. There we go. Okay. I knew something wasn't right, but I couldn't figure out what it was because in the fast graph, it wasn't showing it as a high price. I checked it earlier today before I made the video. Okay, we're back on track here. Now, if the stock price goes up tomorrow, this will rise. But right now, we're at $211.41 at the first buy level. Then the next one, you can do the math wherever the high price ends up. The next potential price would be 65% off the high, which would be much lower. If I share that, people will tell me it'll never happen and blah, 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 blah. And I'll never buy anything. But I do buy things over on Patreon each week. So that's my answer to that. Okay, hopefully this helped whoever asked me about Cummins. And if anybody else has any requests, let me know. I'll get those tickers up on the whiteboard behind me if you're in Patreon or if Full Cyclical Investors Club service or on Seeking Alpha. I usually reply within a few minutes. Sometimes I'm away from my computer, but I usually reply pretty quickly. And then if you want a video, I'll make you a video and get it up just like this one. All right, thanks for watching. I'll see everybody later.